of the Bitcoin BlackRock spot Bitcoin ETF. It's a little bit overdue. I know this information has been out for a week on the ETF, but I don't like to make a video on something as soon as the news breaks. I like to digest it a little bit and make sure that it's something that is in fact important. And I think this is one of those that really is important for a number of reasons. Number one being that BlackRock is the largest asset manager in the entire world. If BlackRock were a country, if the assets under its management were a country, BlackRock would actually be the third largest country in the world. It manages more assets than every other country in the world aside from the United States and China. So that kind of puts things in perspective. And BlackRock is the broker dealer for the Federal Reserve. So if BlackRock is accumulating spot Bitcoin, by extension, the Federal Reserve is also accumulating spot Bitcoin in a way that doesn't appear on their balance sheet or public filing. Now, where it gets really interesting, and people may debate this, but kind of on an existential level, if you play this out, further, you realize that BlackRock is not directly holding the private keys. They're using a custodian, Coinbase, but theoretically, that is a minor degree of separation for all intents and purposes. They do hold their own keys, but they offer their customers a paper Bitcoin derivative product that is supposed to track the underlying value of their private key holdings. Now, in a perfect world, those would match 1-to-1, right? The Bitcoin would have all the spot Bitcoin they claim to have, and there would be no issue. Well, time after time, we know that, these asset managers who have the ability to try to rehypothecate Bitcoin, to issue more paper claims onto the underlying Bitcoin they have, that temptation tends to be too strong to resist. And people, tend to give into the temptation and think that they can get away with that, with rehypothecating the Bitcoin and issuing more paper claims in the Bitcoin they hold. Even though every single person, every single major entity who's ever done that has always blown up and always collapsed. They'll fall to the temptation even despite that track record. And it really doesn't matter what the size of that is. If BlackRock decides to try to rehypothecate the Bitcoin they hold in a major way, they will blow up. I mean, it doesn't matter how big you are. Bitcoin is uniquely designed to destroy entities that try to do that. But BlackRock hasn't. We don't know that they've tried to do that yet. So we're sort of speculating there. Now, what I do think is interesting though is that because BlackRock is an extension of the Fed as the broker dealer for the Fed, when people go to redeem their spot Bitcoin ETF, they're not actually redeeming it in their Bitcoin holdings, right? They're not withdrawing their Bitcoin from the BlackRock trust to their private custodial wallet. They're withdrawing the dollar denominated value of those paper claims against the Bitcoin. So a long way of laying the groundwork for saying that in a situation where the BlackRock ETF gets really big and all of a sudden, and maybe they are rehypothecating, right? Well, if they have a situation where they have an excess of dollar redemptions on their product, they could theoretically have the Fed print money to meet those dollar redemptions without actually ever needing to sell spot Bitcoin into the market. So that's kind of one layer that, makes them a little bit resistant to rehypothecation issues, because they literally have access to, they're more closely positioned to the money printer than any other organization in the entire country, actually. So that's a unique benefit that they have. Now, it gets in the game of, you know, personally, there's a lot of different ways that people spin this, but personally, I'm of the belief that BlackRock understands Bitcoin, that they get what it is, that they're not stupid, that, maybe some people there understand it better than a lot of we do, because, they do this for a living. They spend time studying these things. I'm pretty sure they understand the nature of Bitcoin. They understand why it's important, and they understand the necessity of, accumulating spot Bitcoin. And I think that's what they're in the business of doing. And I think, playing this out, you could have a situation where BlackRock could accumulate a decent amount of the physical supply of Bitcoin that's currently circulating. Now, where it gets kind of interesting is that their assets under management are basically $10 trillion. And to put that in perspective to the circulating supply of Bitcoin, the circulating supply of Bitcoin is roughly 4 million Bitcoin, which is about, prior to the pump, was $100 billion. But now after this recent pump, it's $150 billion. So, whether you use the number before the pump or after the pump, it's basically $120 to $150 billion, which is what the current amount of circulating Bitcoin, that 4 million Bitcoin multiplied by the current market price, would equal. That is basically 1% of the amount of money that BlackRock actually has. And now if they were to, of course, market buy that at once, they would drive the market price up extremely dramatically, way past the all-time high. So you can kind of see how there's like a supply constraint against just this one entity. And of course, BlackRock is not the only entity in the world. They are one of the largest, but if you add the aggregate of all of their entities combined, they start to be less significant. But you get the idea that, like, they, part of me thinks if they are offering this product, that they have already filled their bags to some degree, because just the logistics of trying to do that with the amount of money they need to fill their bags with, and the supply dynamics of Bitcoin, like it's nearly impossible to do. So the fact that they've come out and announced this product means that they probably, during this bear market have filled a lot of that. They have acquired a lot of the Bitcoin supply they've been accumulating. So, what in the recent months and year, everybody's familiar with all the FUD and all the uncertainty and the doubt. Well, certain entities in that environment set the bottom at the bear market lows and the cycle lows, and usually they're very large entities. Well, now you can kind of see how this is playing out, and you have this major entity stepping in, taking the other side of that capitulation, and buying the supply. So, how this plays out in the future is really interesting. While BlackRock, we don't know to what extent, and we can only speculate on how they've been accumulating in the past, we can kind of know with a good degree of certainty that, like, going forward, it's going to be very difficult for other large entities to follow in BlackRock's footsteps and accumulate if they haven't already. It's one of those things where, like, people are just not going to resonate very strongly with the idea of those supply dynamics and the supply curve of Bitcoin being as tight as it is, when we may have seen a little bit of a pump, but we haven't seen a massive bull market. And for most people, it's going to take that massive parabolic move to get them to understand that those supply dynamics are real and do exist. But of course, by the time that happens, a lot of the alpha has disappeared. May not be completely gone, but you don't want to chase a parabolic move, right? I mean, you want to get in prior to the parabola and distribute into the parabola. Is generally going to be the best way to, from a risk-adjusted perspective, play the volatility in the market. Now, this, it BlackRock is such a large entity that, it's almost a geopolitical shift. And it isn't, you also have Fidelity, Charles Schwab, and Citadel also announcing that they're getting into the Bitcoin space. So it really is this like monumental shift. The reason why I say it's almost geopolitical is because, like BlackRock is, again, like the third largest country by assets in the world. They manage $10 trillion in assets. That's only behind the United States and China as a country. So you have other, BlackRock is sort of like a leader in the financial space in the sense that they tend to be the first mover. And one of the reasons why they tend to be the first mover is because they have regulatory capture, right? They can tell politicians in like a new market that doesn't have well-defined regulations, they can create those regulations. They can tell politicians like, hey, we want to be the players in this market. Here are the regulations that we need you to publish, and here's what you got to do to publish them. And that's what we're seeing right now. You're seeing the SEC just went after Binance and Coinbase, the two largest players in the space. And then like a week later, you see Citadel announcing that they're opening a new cryptocurrency exchange, right? Very clear evidence of these major players using their political ties to, hinder their opponents. Now it gets a little shady because for the Bitcoin spot ETF for BlackRock, they're actually using Coinbase as a custodian. So who knows? I mean, one thing that does tell me, if people, and I'm getting a little bit off on a tangent here, but people, tend to naturally worry about the solvency of exchanges. And I think, this really lends itself to Coinbase sort of being one of the safest exchanges. It's a publicly traded exchange, and so everybody, you can see their financials published quarterly. But not only that, but because BlackRock has chosen them as a custodian for their Bitcoin, they're not going to let Coinbase go into bankruptcy. Like if Coinbase had an issue or a solvency issue, they're going to provide emergency credit. And if it came to it, they may just acquire Coinbase altogether. They're not gonna let that custodial service die, right? I mean, if they need to bring Coinbase into the BlackRock fold, they'll do that. But that's a major backer of that exchange, and I'm not really worried about Coinbase as an entity now. That's not an argument to not hold your own private keys. I think people certainly should hold their own private keys, but if you are trading, you need to hold a substantial amount of capital on an exchange. And if you are holding a substantial amount of capital on an exchange, you want to make sure that whatever exchange you're doing that on, has some degree of safety. It's not an endorsement of Coinbase. Certainly not an endorsement of BlackRock. You could trade the BlackRock spot ETF. But again, I think I'm getting a little bit off on a tangent. The point of this video is to drill down into the steep supply curve nature of Bitcoin. And when I say that, one thing to put that in context is the idea that, during this, from the cycle lows, like in the crash, the Bitcoin crash in 2022, 75% of Bitcoin still remained dormant or, in the hands of what is referred to as long-term holders, or wallets that have not distributed or indicated an intent to distribute for a period of 9 months to a year. And those are wallets that are holding in cold storage, a lot of these wallets didn't sell when Bitcoin was at 69,000. So now obviously there is a price where, those quote unquote long-term holders or dormant holders or what's called the liquid holders would be convinced to, become liquid holders and step into the market and sell. But those prices, that would be at a price that is much higher than any price Bitcoin's been at in the last year or two. Again, that's sort of exceeding the boundaries of what people probably believe to be possible. But, the reality is, if there are 4 million Bitcoin, what's referred to as liquid Bitcoin, available on exchanges, or, part of when you go onto the exchanges, the volume metrics of Bitcoin frequently traded and sold, there's 4 million of those Bitcoin, and that amounts to roughly $150 billion. So, if you buy those off the market, right, and all of those go to cold storage, like, you get into a situation where if there's no Bitcoin for sale, it doesn't really take any buy pressure to move the price up, right? Because price is set in the market by the marginal seller, which is contrary to what people think. It's where people are willing to step into the market and sell whatever asset, they're trading, whatever that price is, wherever they're willing to do that. So yeah, if you could have a situation where demand just outpaces supply to such a degree that the price just moves very violently up to a level where, the supply, the nature of long-term holders and short-term holders starts to shift, right? And that you would see that after a major parabolic move. One thing that also lends itself to Bitcoin sort of being at the start of a parabolic rally is the fact that, Bitcoin the Bitcoin spot market is driving the recent rally. And you can see that in the premium of spot Bitcoin over, Bitcoin perpetuals or futures. And another way you can see that is the way that the funding rates for Bitcoin has dropped into negative territory as Bitcoin has rallied pretty aggressively from the $25,000 lows, which means that as the spot premium is increasing and, price is being driven by spot demand in the market, that as price is ripping much higher, shorts are actually paying longs to be in their losing position on the funding rate, which, that sort of tells you that we're in the initial stages of a rally and that this is a healthy market driven by spot demand rather than, an increase in leverage or, other type of degenerate type of leveraging of the market. And also the fact that Bitcoin itself is leading the market against altcoins. Now, altcoins will certainly have their time to shine, but these are the type of characteristics you generally see in the initial phases of a Bitcoin rally. Yeah, I hope you guys like this video. If you guys like this type of content, please make sure to leave a like on the video, subscribe to the channel if you haven't already, and